Donald Trump's 2024 election win has already set off reactions across the financial world, sparking shifts in cryptocurrency values and ripples through global markets. As investors speculate on how his policies might shape the future, digital assets like Bitcoin and Ethereum are experiencing a renewed surge. Meanwhile, traditional sectors and currencies are adjusting, with some industries bracing for change and others anticipating growth under Trump's pro-business, deregulation-focused agenda. So, will Trump's stance on crypto usher in a new era for digital currencies in the US? And how might his economic policies impact global markets and investments? In this video, we'll explore what Trump's return to the White House could mean for the crypto world and traditional finance, analyzing potential opportunities, risks, and the shifts we might see in global markets. Stick around as we dive into the possibilities ahead. Following Donald Trump's 2024 election win, financial markets have reacted swiftly, with cryptocurrencies leading the charge in early trading. Bitcoin, the world's most recognized cryptocurrency, saw an impressive rally, surging nearly 8% to surpass $75,000 for the first time. This climb continued throughout the day, pushing Bitcoin past $76,000 by late afternoon, setting a new all-time high. Investors view Trump's win as potentially favorable for the crypto market due to his recent pro-crypto statements and policy positions, which include limiting government oversight and opposing a central bank digital currency. Ethereum and Dogecoin also joined the rally, with Ethereum spiking 8% overnight and Dogecoin seeing dramatic gains of up to 29% before stabilizing. These moves signal strong investor confidence that Trump's policies may further open the door for cryptocurrencies. The immediate post-election reaction extended beyond crypto, with shifts in traditional markets and global currencies. The US dollar strengthened considerably as investors bet on higher inflation and growth expectations under Trump's administration. Analysts suggest that a stronger dollar aligns with Trump's pledges to stimulate domestic growth, cut taxes, and potentially reduce the Federal Reserve's role in regulating markets. The dollar's rise has also impacted other major currencies, with the euro dipping close to the key $1 level amid renewed fears of trade tariffs. A stronger dollar traditionally impacts global trade, putting pressure on export-heavy economies and making imports to the US more affordable, effects that could ripple through global markets in the coming months. In the bond market, Treasury yields rose sharply, reflecting investor expectations for increased borrowing and inflationary policies under Trump's administration. Yields on US government bonds have been rising in anticipation of a Trump victory, driven by forecasts of expanded federal spending and deficit increases, which generally push yields higher. As bond prices fell, yields rose, signaling that investors are anticipating fewer cuts in interest rates from the Federal Reserve and possibly more sustained inflation under Trump's economic plan. Stocks also responded to the election, with gains across sectors such as technology, defense, and fossil fuels. Trump's pro-energy stance, combined with his focus on deregulation and corporate tax cuts, has created optimism among investors in these industries. The tech sector in particular is expected to benefit from fewer regulatory constraints, while energy stocks are boosted by expectations of increased domestic drilling and reduced restrictions on fossil fuels. Donald Trump recently shifted from his past skepticism of cryptocurrency to an outspoken proponent, adopting a stance that places digital assets at the forefront of his economic agenda. During his previous presidency, Trump openly criticized cryptocurrency, calling it a tool for criminal activity and a threat to the stability of traditional financial systems. His administration even took regulatory actions, including the SEC's lawsuit against Ripple, to curb the industry's rapid growth. However, Trump's position in 2024 has markedly changed, a transformation evident in high-profile events and his policy pledges, signaling a strategic embrace of the crypto sector to appeal to a growing base of digital asset advocates. Trump's July 2024 speech at the Nashville Bitcoin conference was one of the turning points in his new pro-crypto posture. Trump said at the event that he wants to make the United States the crypto capital of the planet, and that he would make Bitcoin a key component of the country's financial strategy. He declared that he intended to create a national Bitcoin stockpile, presenting it as a strategic asset similar to gold reserves. So this was more than just hyperbole. The US government already holds significant Bitcoin assets, over $5 billion from seized accounts, and Trump's proposal indicates a commitment to expand the stockpile, using it as a hedge against global economic uncertainty and as part of a broader vision for a Bitcoin superpower future. Trump's campaign has also emphasized a plan to establish a crypto presidential advisory council in keeping with this position. To steer Bitcoin policies from a pro-industry standpoint, this council would assemble professionals and industry insiders. According to Trump, this council would assist in creating laws that encourage innovation in the cryptocurrency space and guarantee that digital assets increase with little intervention from conventional financial regulators. Trump's pledge to change the regulatory environment governing cryptocurrency is reflected in his campaign, which calls for sector supporters rather than opponents to influence legislation. Trump's firm stance against a central bank digital currency or CBDC in the US is another aspect of his change. He has opposed the Federal Reserve's investigation of a digital dollar on numerous occasions, stating that a digital currency under government control might jeopardize people's financial independence. During rallies and campaign speeches, Trump referred to the idea of a CBDC as a dangerous threat to freedom and promised to stop the Fed from establishing one. His position is in line with the cryptocurrency community's larger opposition to digital currencies issued by central banks, which they contend might result in intrusive government control over money. Donald Trump's proposed cryptocurrency policies stand in contrast to regulatory trends emerging around the world, positioning the US as a potentially unique jurisdiction for digital assets. While Europe has moved forward with comprehensive regulations, such as the Markets in Crypto Assets or MiCA framework, designed to establish a unified approach to crypto across the European Union, Trump's focus has been on reducing federal oversight. According to the EU, MiCA aims to protect consumers, prevent money laundering, and ensure financial stability across EU countries by creating consistent guidelines for crypto businesses. If Trump's lighter touch regulatory approach prevails, the US could emerge as a more attractive destination for crypto firms compared to the highly regulated European landscape, potentially drawing business and investment away from regions with stringent controls. In Asia, several countries, including China and India, are exploring or actively pursuing central bank digital currencies as a way to modernize their financial systems. China's digital yuan is already in a pilot phase, with plans to integrate it more deeply into the country's economy. The Reserve Bank of India is also looking into integrating a digital rupee, which it sees as a means of improving monitoring and financial inclusion. These moves are significantly different from Trump's categorical opposition to CBDCs, which he sees as a possible government intrusion into private matters. Because he wants to preserve the private sector's stake in digital assets rather than transition to a state-controlled digital currency, his position may put the United States in conflict with these economies. This divergence from global policy norms could significantly impact the international adoption of cryptocurrencies and the positioning of the US as a leading crypto-friendly jurisdiction. Trump may promote innovation in a more open crypto market in the US by opposing a state-run digital dollar and concentrating on measures that support decentralized assets. Businesses and investors throughout the world may find this pro-crypto climate appealing, particularly when other nations impose stringent laws or state-backed virtual currencies. Blockchain businesses and financial institutions may migrate to the United States if Trump's administration turns the country into a safe haven for cryptocurrencies, as many of them are keen to operate in a less regulated atmosphere. In the long term, Trump's stance might spark a global debate on the role of government versus private enterprise in digital finance, potentially encouraging other countries to weigh the benefits of decentralization over state control. By adopting a policy that contrasts sharply with global trends, Trump is setting the US on a distinctive path that could shape the future of cryptocurrency, not only domestically but internationally, potentially establishing America as a central player in a decentralized global economy. However, Trump's economic stance might also have a few repercussions here and there. In the last few days, investor hopes of higher domestic growth and possible inflationary pressures from Trump's proposed tax cuts and spending plans have caused the US dollar to appreciate sharply. A higher dollar can have global repercussions. For instance, if European economies prepare for potential trade disputes or tariffs under Trump's presidency, the euro might depreciate, while the Japanese yen, which is usually a safe haven currency, may witness volatility as the dollar surge drives investors to shift assets. The Chinese yuan may also see negative pressure, reminiscent of trade tensions observed during Trump's previous tenure. Emerging market currencies will probably be impacted by this dollar strength, which will put pressure on governments that rely largely on dollar-based debt, since they might find it difficult to afford increased payback rates. In the stock market, Trump's policies signal potential growth for certain sectors, especially technology, defense, and fossil fuels. Technology firms stand to benefit from more relaxed restrictions, even as Trump's stance on bolstering national security and possibly raising military expenditure may boost defense stocks. It's also expected that Trump's focus on energy independence will benefit the fossil fuel sector by loosening restrictions on oil and gas production and reducing environmental regulations. However, this focus on fossil fuels may pose a danger to the clean energy sector if subsidies or incentives for renewable energy projects are removed. Global firms may also encounter difficulties, especially if Trump's proposals impose additional trade restrictions or taxes, which would raise expenses and make conducting business abroad more difficult. In the years ahead, the global financial landscape will continue to be shaped by rapid changes, with the US and other major economies responding to Trump's changes and future plans. It's hard to predict what will happen and how the world will react, so we'll just have to wait and see what Trump does first. So what are your thoughts on Trump's potential impact on the crypto market and the global economy? Do you think his policies will boost the world of digital assets? Drop your thoughts in the comments below. If you enjoyed this video, please give it a thumbs up and subscribe to our channel for more insights on finance, crypto, and the markets. Until next time, happy investing.